Well, we could end up breaking that range in both directions. Maybe we'll go below 7% before we go above 10%. But I think we're going to take out the highs from 2022 before the end of 2023.
Wow.
On a year-over-year basis. But even if we don't take out the highs in 2023, we'll take them out in 2024. I mean, inflation is here to stay, right? The days of sub 2% or anywhere near 2% inflation are over. We're now going to pay the piper for decades of inflation that central banks have created. And now we're going to have to deal with the consequences.
During a discussion with David Lin, PeterSchiff, the chief market strategist of Euro-Pacific Asset Management, shared his predictions for inflation, stocks, and gold in 2023. According to Schiff's argument, as we move further into 2023, there is a possibility that the inflation figures could deteriorate further. The economist suggests that both the markets and the Federal Reserve may not be adequately prepared to handle such a scenario. In his interview, PeterSchiff said that, "I think it will be a bigger recession, a deeper recession than anything we've experienced in our lifetimes." Schiff has issued a warning that the actions taken by the Federal Reserve could potentially lead to a financial crisis and a more severe recession than what the central bank has acknowledged. He believes that the Fed's actions are inflating asset prices and leading to a dangerous misallocation of resources. Although Schiff highlighted that gradually raising interest rates can cause more inflation, Schiff stressed that if rates were sufficiently high, then inflation would come down. Towards the end of the previous year, a prediction was made by Schiff that inflation was set to intensify significantly, and the US dollar was headed for one of its most challenging years yet. Before proceeding further in this video, please make sure to click on the subscribe button below to stay updated with our latest content.
Experience is going to be much worse than the 1970s. I've been calling it an inflationary depression because it's going to be much worse than a recession. It's not, and it's going to be very high inflation. But a lot of people think that the reason we had a depression was because prices went down, which is not true. Prices went down as a result of the depression, but it didn't cause it. And in fact, it did provide some relief. But the whole idea that if prices are coming down, we should worry that it might cause a recession is nonsense. It's like trying to blame the rain on wet sidewalks. They have it in reverse. But what's going to happen during this inflationary depression is going to be very different because we're not on a gold standard anymore. We're on no standard. We just have fiat, and the government's going to print even more of it to try to prop everything up and bail everybody out and prevent politicians from having to make the difficult choices of cutting government spending. They're just going to print money and give it to the government so they can spend that. So it's going to be very different. I think that the nominal level of a lot of stocks, those prices are going to go up for a lot of stocks. But in real terms, if you price them in gold, they're still going to go way down. So stock prices are going to come down in terms of real money, but they're going to go up in terms of funny money. Now, some companies' stock prices won't go up because these companies are going to go bankrupt. And so they go out of business, the stock is zero.
According to Schiff, if the bubble bursts, significant losses could be incurred, and the high-growth firms as well as cryptocurrencies might face the most substantial impact. Schiff believes that gold is the king of all commodities, saying it will do very well in a commodity bull market. Schiff had previously said in an Epoch Times interview that gold would experience an increase in value in 2023 due to a decline in the strength of the dollar. The Schiff echoed his take that current iterations of crypto have no future and will eventually run out of fools. According to Schiff, fiat tokens like Bitcoin that are just conjured into existence and have no real value other than something that you could trade and gamble on, but eventually you run out of fools. Peter argued that investors should look forward to gold instead of chasing after dumb asset like Bitcoin.
I think to some degree, people that were frustrated gold bugs got into Bitcoin, because Bitcoin was performing, right? It was going up while gold was going sideways. But Bitcoin was marketed as digital gold. That was a whole selling point. Hey, gold is obsolete. Gold is irrelevant. You got Bitcoin. And I think that on the margins took away some demand from gold. I mean, maybe there were some institutions that would have bought gold, but because Bitcoin was there competing with it, they didn't buy gold. Maybe they didn't buy Bitcoin either, but they thought, well, why buy gold? Because, there's Bitcoin and, I don't know. I think that it certainly took away some of gold's thunder. A lot of the talk on the financial networks was about Bitcoin. It wasn't
Yes.
about gold. It was, Bitcoin, Bitcoin, Bitcoin. And so, but meanwhile, the smart money was buying gold the whole time that everybody was talking about Bitcoin. It was the dumb money that was being suckered in to Bitcoin. But I think that now that the Bitcoin bubble has popped, and over the next several years, the air is going to be coming out, I don't see that problem anymore from a marketing perspective for gold. I mean, nobody is going to be comparing Bitcoin to gold. Nobody is going to be talking about it as digital gold, as a safe store of value, as an inflation hedge. Everybody has pretty much come to the conclusion that it's a speculative asset. The problem is, what exactly are you speculating on? Because there's no value there. So if it's not digital gold, what is it? It's nothing.
Peter emphasized that just because we have a recession doesn't mean inflation is coming down. In his previous interview, Schiff said that the reality is inflation is not going to weaken, it's going to strengthen. The economy is not only going to weaken, but weaken much more than the markets expect. Peter believes that the recent optimism regarding the Federal Reserve easing its monetary tightening is not primarily due to a weakening economy, but rather a weakening in inflation. As discussed in a previous podcast by Peter, once inflation becomes a problem, it is difficult to reverse the situation. In other words, inflation is like a genie that cannot be put back in the bottle.
But I think we're going to get quite a few negative prints in 2023 as more air comes out of this bubble. And then I think it's going to be very hard for the recession deniers to continue to put a positive spin on this economy. They're going to have to admit that we're in recession. The question is the Fed going to change course as a result of that admission, or is it going to continue with the rate hikes and quantitative tightening making a bad situation worse, which is what it should do. But the question is, will it do that?
In his recent podcast, Schiff said, anybody who is hoping that the Fed is winning the inflation battle, these numbers throw cold water all over that narrative. On this note, our Today analysis come to its end. What do you think of PeterSchiff predictions for stock, gold, and cryptocurrency performance in 2023? Do you agree with his outlook about market? Share your thoughts in the comments section below. If you have found this information useful, we would greatly appreciate it if you give this video a thumbs up and consider subscribing to our channel. We are committed to providing you with more updates and valuable content in the future.